Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was August 2023. We are a national buyer's agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere. We help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. Operating through 3 decades, our experience will ensure no sleepless nights worrying about property markets. On this channel, we talk about all things property, but most importantly, I read the news and separate the facts from the fiction so you don't have to. Let's get straight into it. Now, for those of you actually who are not familiar as to how a buyer's agent saves you time, money, and reduces stress, here is a short explanation. So instead of taking on the very significant and often risky journey of buying a property by yourself, Providence acts as your representative and expert consultant when buying a property. So we focus on 3 main areas, and let me explain those to you. Firstly is locating your ideal property. Now that's both on and off market, looking at the state, the city, the suburb, the structure, the street. Next, we look at assessing the property's pros and cons. So we're talking about build quality, owner-occupier appeal, layout, use of space, supply and demand, distance to amenities, etc. Lastly, negotiation for the best price at the most attractive terms. And I've mentioned many different strategies on negotiation in previous videos, so please go through and watch them if you have more questions. But I wanted to talk to you about the main reason why we see buyers failing, okay? The biggest reason is they listen to the news. That's the first reason. Don't listen to the news, okay? But let's go into the list that I wrote up before. So one of the main reasons buyers fail is because they don't establish a clear and realistic objective. The amount of times I speak to people that are saying to me, oh, I've been looking for 6 months, I've been looking for 9 months, we've been looking for a year, I've been looking for 2 years. It's because they didn't create a clear and realistic objective. And most of them jump straight in and start looking and attending inspections, but they're not clear on what they're actually trying to achieve. In a word, they are looking for a unicorn, and this results in delays and failure. And our planning strategies that we do with clients before we obviously engage them, that saves time and delivers a more realistic targeted brief. Now, we see buyers waste time and lots of it. And in the property market, time is money. So on average, according to Domain, they report that it takes buyers 9 months to purchase a property. So we purchase within 14 to 30 days for most of our clients. Now, if you're not in a rush, just remember that as of September 1st, 2023, we've seen prices increase in value by an average of more than $97,000 in Sydney, which is $2,800 a week, $46,400 in Brisbane, which is $1,500 a week, $32,200 in Perth, which is $1,100 a week, and $24,582 in Melbourne, which is $800 a week. Now, interestingly, according to the Australian Bureau of Statistics, the average Australian household saves approximately $192 a week. So full-time workers earn approximately about $95,000 a year, $95,500 a year. So if you are waiting or trying to save more, chances are that you'll never keep pace with the property market. So create a strategy, get off the couch, and go out there and buy something. Buyers make expensive mistakes through lack of experience, and buying in the wrong area, not doing due diligence on the integrity of the house, not reviewing the neighbours, NAPLAN scores, etc. Most Australians buy 4 or fewer properties in their entire life, and we've bought almost 2,500 properties. So there's a huge amount of experience there. Now, buyers don't conduct nearly enough research, and we use comprehensive checklists of hundreds of data points before proceeding with a purchase. Let's get into some data now. Lower than average advertised supply levels remain key factors in supporting upwards pressure on property prices. And we did see the number of listings through winter. However, total listings remain 15.5% lower than last year and almost 19% below the previous 5 years. So the majority of fresh stock is being absorbed by the market almost instantaneously. I know that we're buying properties that are getting listed and we're buying them before the first open. We're just getting them off, okay? Now, across the capital cities, the largest rise in listings over the past 2 months has been 10.2% in the ACT, so in Canberra. Sydney and Melbourne have also recorded a lift in listings, up 9.8% and 8.3% respectively, although both cities continue to record stock levels that are lower than last year. Now, this fact really interested me a lot. Advertised supply remains remarkably low still in Perth, Adelaide and Brisbane, where we're currently actually buying the majority of our product for our clients. Total listings are more than 40% below the previous 5-year average, and they continue to trend lower. We continue to see rental vacancies dropping, and we are now 60% below the 10-year average. Every capital city recorded a reduction in total rental listings over the past month, reinforcing ongoing concerns around the lack of rental supply, with dwelling approvals continuing to trend lower, especially across the median to high density sector. So the outlook for additional rental supply also remains dim. I can't imagine that the Australian government is going to be able to organise the millions of new properties that we're going to need for people over the course of the next decade or so. I just can't see it. Now, the gross rental yield for dwellings across the combined capital cities is currently 3.6%. With an average interest rate of above 6%, it's no wonder why, capitals like Brisbane, Perth, and even Adelaide are attracting more investors. So we can definitely see that that's what's happening there. Now let's talk about interest rates. They just announced today, about a couple hours ago, before I did this video. I always get my video stuff ready, and I'm just waiting for the interest rate announcement now. In the old days, before people cared about interest rates, on the first of the month, my data was ready and I was good to go. But now I've got to wait for the RBA to tell me what's happening. Today, the Reserve Bank of Australia, the RBA, decided to maintain the official cash rate at the current level of 4.1%. Now, this is the third month in a row, and inflation's continuing to track lower, and household spending is also slowing. It's getting more and more difficult out there for people. But let's take a look at the winners and losers for the month. Brisbane had, when we look at the performance, Brisbane actually had the best performance at 1.5%, with Sydney and Adelaide actually tying for second place at 1.1% increase, and Perth taking the bronze at 0.9%. But let's look a little bit closer. If you can see the far right column there, you'll see Perth first, Adelaide second, and Brisbane. And I think it's really interesting because if we take a longer view, we can see that Perth has had the highest return this year at 9.5%, Adelaide at 6.2%, and Sydney at 4.5%. And if you go back to our video from February 2021, we did say that Perth was definitely going to perform quite well over the next 5 to 7 years. Now, it's easy to get caught up in the big numbers, and I know lots of clients come to me with the big numbers, but in order to get great results for our clients, we've got to look closer. We've got to explore the markets within the markets, and I've talked about this many times in a lot of our videos, but I wanted to just drive that point a little bit further home, and I'm just going to show you some quick numbers here. Now, I don't have time to go through dozens of suburbs, so I encourage you to pause the video, check them all out, because I'm going to show you Sydney, Brisbane, and Adelaide, I think, in this. Okay, first let's look at Sydney. So, which according to the high-level data, as I just showed you a few slides back, as a capital city, it increased by 1.1% in August. And based on the almost $1.1 million median dwelling value, that's an increase of $12,000, okay, for 1 month, all right? But if we look at the top 10 best performing suburbs, we can see things like Marrickville, as an example, saw an increase of 8.9% just last month. So that is a $155,000 increase in the median value of Marrickville in that 1 month, okay, which is very, very interesting. Now, Ku-ring-gai also saw a 6.8% increase, which is $190,000 for the 1 month. So again, this is all just about understanding what time's actually costing you and how quickly the market is moving. Now, let's have a look at Adelaide, which according to high-level data, as shown in the previous slide, increased by 1.1% in August. So that's $7,500 increase. It's a lot, but when you compare it to some of the suburbs, it's not a lot at all. So if we take a look at the top 10 performing suburbs here, we can see Playford increased by 10.5%, which is over $46,000 in 1 month. And Gawler, which is Two Wells, is up by 9.8% or $55,000. Okay? And now let's finish on WA. Again, I don't have time to go through all these, but according to the high-level data, it increased by 0.9% or $5,500 for 1 month. But if we take a look at the top 10 performing suburbs here, we can see Mandurah saw an increase, and that's how you say it, Mandurah. When you say Mandurah to the locals, they don't like it. But Mandurah saw an increase of 12.2% last month. That's $67,000 increase in 1 month. Now, you may recall that this is the area where I featured my granny flat build, which I purchased for myself in November last year. And if you want to watch a breakdown of that strategy and how I did that, go to the May video on our YouTube channel. Great returns there. I'm very, very happy. Now, last one I want to look at is Rockingham, and that is the LGA south of Perth CBD, and we've been buying a lot there. Certain suburbs we stay away from, but there's quite a few that make a lot of sense. 11.1% increase last month, over $60,000 increase in 1 month. Always remember that there are markets within markets. This is the way we buy property, by focusing on deeper data. Now, I'm going to show you some recent purchases that we've done just to finish off today, okay? So this was a purchase that we did. Client had a maximum budget of only $700,000. They were looking for a combination of capital growth and rental yield. We were searching for a rental yield greater than 4.5%. The current across the combined capitals is 3.6, so we wanted to beat that. And we wanted a 20-year average capital growth rate above 5%. Now, to make things fun for us, this particular client also needed the property purchased within less than 30 days because their pre-approval was going to run out. And that meant that when they got reassessed by the bank was going to lend them less. They knew they could handle the repayments, but the bank was not going to allow them to continue to buy at that higher price point. So we secured this property before the first open home at $650,000. And this property would have easily sold for over $670,000. But what you can't tell in this photo is that the paint job was very poor. Okay, some areas of the home were actually not even painted at all. They still had primer on the walls. That was it. Okay, so this led to the property presenting really poorly, and they tried to sell it late last year with no success. So the agent had convinced the clients to get it moved along under market value. And we love this as it was only around a $12,000 quote that we got on average for the paint job. And we know that once we do that, it's going to add about $20,000. We know that we can rent it without the paint job. Remember, it is tax deductible, but the client went under their budget anyway, and they've got the money for it. So it worked out well. And my team have made arrangements for the whole paint job to be done. And this is a quality build. It's going to rent really, really well. The client's based in Hong Kong. They don't have time to do any of this themselves. I was super impressed by this house. It's a 250 square meter house, 4 large bedrooms, 2 bathrooms, a games room, a home theater, and a home office. Now, the figures are great with rental income at $740 per week. So that's going to yield 5.9%. All right. Now, it's just over 30 kilometers north of the Perth CBD. It's located right next to an RAAF base. And this helps our clients lock in great tenants from the Australian Air Force, and because they've got rental assistance, so we can generally push the rents a little bit more because they are subsidised to a certain extent. And this is a 2010 build. So this house is less than 12 years old, and it last sold 8 years ago for $510,000. And that's an increase of less than 3.5% per year for 8 years. However, in the past 12 months, property prices in this suburb have increased by an average of 6%. So that's double what they usually do. And we expect that this suburb is going to continue to see attractive and stable capital growth above its previous 10-year average. And this is why understanding cycle timing is so important. And we have a whole presentation dedicated to cycle timing. However, we don't have time to go into it today, but if you want to watch it, jump onto our website. We did it for ANZ Bank at their main office in Martin Place a couple of years back. So it's a good video. Please watch it. This one we bought for Matthew, and he's a fantastic client. Great location, only 2.8 kilometers from the coast, living near the beach. It definitely never goes out of style, so we're quite happy with it. It's 35 Ks from the CBD, from Perth. It has had a healthy 4.8% capital growth rate over the past 10 years. The client had been talking to another buyer's agent, but luckily they saw some of the previous purchases that we did and they were happy to come across to us. Their financial circumstances were changing as well. We needed to make sure we got this done quickly, and we did. Bank valuation came in at $620,000. We secured this under market value at $607,000. It's a 535 square meter block. Rental income, main dwelling is $550 a week, second dwelling $375 per week, which means it's actually got two rental incomes. Yes, two rental incomes equaling $925 per week. And on the purchase price, that is a 7.9% rental yield. Very, very attractive. The granny flat is actually set up perfectly with complete separate access, and this one was a great find. The granny flat was added only in 2020, so it's still very young, and the kitchen in the main house was updated as well as a bathroom in the main dwelling. So this was a cracker of a purchase. It's a unicorn, so don't call me up and say, Jay, I want exactly that. We'll try, but I'm just saying this was a really good buy for our client. This is another purchase that we did. This is the last one I'll show you. This is Brisbane. Clients were looking for a way to eliminate some debt in their home in Melbourne. They decided to purchase an investment property with the goal of selling it in about 10 years' time and put those profits on their home loan, and they had a budget of about $900,000. So we employed a classic growth strategy here, buying a premium property in a great location with a large land component in a suburb with above average 20-year capital growth. We purchased this 335, 5 car spots on a huge 728 square meter block at $851,000. Really happy with this purchase. Rental yield, we're getting about $600 per week. It's nothing amazing, but remember, this is a capital growth strategy, not a rental yield play. The home's 22 Ks north of Brisbane CBD, 1 K to the nearest Woolworths and multiple schools, and 5 Ks to the closest train station. So we were wrapped with it, purchased it at $851. Capital growth for the suburb is 8.21%. And although the past performance is not an indicator of future performance, we're confident that this property is going to be worth about $1.928 million in about 10 years' time, increasing our client's wealth by more than $100,000 per annum. Great growth strategy for that client. Remember, we can't help you until you commit, and once you commit, we won't let you fail. So we're bringing two things together here, your desire to build wealth and our 18 years of experience to buy property. For more than 3 decades, Providence have helped Australians open a life of opportunities through real estate, giving them the future that they want. We buy unique quality assets in areas where demand outpaces supply, and we focus on properties that appeal to the much larger market of owner-occupiers, 70%, versus investors of only 30%. So we buy in the right capital cities at the right time, guided by economic property cycles, and we buy the property which is uniquely suited to your situation, which will act as a springboard to get you to your next wealth building stage. Thank you so much for your time. If you've liked what you've seen here and you'd like to keep up to speed with what's happening in the Australian property market, smash that like button, hit the subscribe button as well. If you'd like further education, you can download our ebooks. They're absolutely free. The links are going to be in the YouTube description below. I want to thank you for your time today, and I will see you next month.